good afternoon, good evening, traders from across the globe. I'm the short-term trading live with Oscar. 631st video, baby. Yeah. 631 technical analysis videos we put together to help you become better at this crazy game. Traders, this video is being filmed on Monday night for Trading Tuesday. That's September 14, 2010. What we have in the markets right now is very interesting. If you've been following my video segments, then you will see that in the last video, we told you that the head and shoulders head test is still in play. And traders, it is still in play. And I kid you not, I'm going to write something on the board for you right now. It hasn't been on my board in a long time. But now that I look over, I realize I've used the real estate. So where can I put this? We're going to put it right here because, traders, here's something that I want you to keep in mind over the next couple of days. Do not, and I say do not fall in love with the upside here. And I'm telling you, you should not. And I will show you why. I love what we're seeing. I love the fact that we got above certain levels. I love the fact that we're getting into the head test area of the head and shoulders, and maybe we'll get above it. But I am not going to fall in love with the upside yet, not unless we clear straight above that head and shoulders and settle at least 2 or 3 days above it. Then maybe we'll think about falling in love with the upside. Traders, do not forget this. We are coming out of a small head and shoulders right now. There is a much grander head and shoulders above and beyond the one that we're in. Right now, we are in the right shoulder, which is when the head and shoulders ends. Shoulder, head, shoulder, and then it finally ends. We are in the right shoulder, but there is a head and shoulders in that right shoulder, and that's the head test we are doing right now. We are not doing the big head test on the big head and shoulders, which is why I am telling you, do not fall in love with the upside here. Please keep that in mind. However, we do have a green Omni on the board for trading on Tuesday. Traders, we do think it's going to go up, but we are not going to stay in long. We're going to take what we can get, if in fact we are right on our purchases, and we're going to get out. Technically, I will show you why that is the way we need to play this game. Don't forget, the head and shoulders head test is still in play. It's very important. Traders, futures trading is risky and can cause substantial financial loss. Please do not play this game if you do not understand that, if you do not have money to lose. And I'm not talking about money to play with. I'm talking about money to lose. If you do not have money that you can actually lose, don't play this game because it is not an easy game, and lots of people do get their heads handed to them. But there are some good traders out there. There are some winners out there. And traders in the middle, I hear that maybe, yeah, we're going to ask Oscar the comment question of the day. Ask Oscar. And you know what, traders? I can't wait because I got my envelope, and it is from Ted from Oklahoma. Ted from Oklahoma. And my able-bodied assistant, what am I opening this envelope with? Don't hurt me. Oh, a tea bag. A tea bag. I'm starting to feel it already. How am I going to get this open with a tea bag? All right, this should be interesting, traders. But you know I'm crafty. I'll get it open one way or another. Oh, how about that? I already got a little dash going. A tea bag. It might get a little messy here. Watch a British going to come beat me up now. Come take that tea bag. All right, traders. I did it. I got it open with a tea bag. And let's see what we got here. The comment question of the day. Ask Oscar. And Ted from Oklahoma says, Dear Oscar, do you think the ES will fill the gap it left from today's opening? And I have to say, Ted from Oklahoma, that is a great question, heads up question, and that is basically what tonight's chart segment is going to be about. Because in a couple of moments, I'm going to put together some charts and come back to you, and I am going to answer this question for you. So traders, is there a gap? I'll tell you what, let's answer that with some charts. I'm going to put together a chart segment right now. With no further ado, let's go look at some charts. Okay, traders, Ted from Oklahoma had a very interesting question. Do you think the ES will fill the gap it left from Monday's opening? And Traders, you see what he's talking about right there? Is that a gap? Is this a gap? We're going to answer this question for you. What we do have for sure is shoulder, head, shoulder, the 200 bar moving average right here. The shoulder, head, shoulder, we're above that right now, getting into the head test area, and we got above major resistance. Now, is this right here considered a gap in the S&P? Traders, let me show you a series of charts here that will answer that question for you. Traders, we're looking at the leader, the Dow Jones Transportation Average. This is a daily bar chart. There is no gap at all whatsoever on this chart. This is the leader of U.S. indices. If the leader does not have a gap, then it becomes questionable whether or not the followers have a gap. But what I'm showing you here is this. The leader, or we consider the leader of U.S. indices, is the Dow Jones Transportation Average. A gap would be if the market was moving up, and then it opened up one day here and took off, leaving a gap. That's a true gap. We do not see a gap here at all whatsoever because the days here are all covering one another. The low here is within this day, the low here is somewhere within this day, and so on and so forth. So there is no gap in the leader. What there is happening in the leader is we are well above the 200 bar moving average. I like that. There is the head and shoulders here, and we're just in the head test area. Now, traders, the head test area, there is still room to play and move a little higher here, but I am not falling in love with the upside. I think we stop up here, fail, and have a miserable break. So do not fall in love with the upside. No, there is no gap here on the Dow Jones Transportation Average chart. Let's look at a few more of the leaders and see if there's any gap left there. Okay, traders, we are looking at our secondary leader, the NASDAQ December daily bar chart. The NASDAQ clearly no gap at all whatsoever because the low of today coincides with the high of Friday, or at least they go into one another. No gap left. However, we are above the major resistance. We are in the head test area and almost above it in the NASDAQ, so bravo for NASDAQ. Here's where the problem lies. Top 1, top 2, top 3. Will this turn out to be a triple top by the end of this week or by the end of tomorrow's trading? Well, it's possible. We're not up high enough yet, so we have room on the upside, which is why I think for day trading on Tuesday we have an upside play and we can get long, but I don't know how long that will last. We do take this one day at a time. But so far, no gap here on the NASDAQ December daily bar, no gap on the first leader, the primary leader, the Dow Jones Transportation Average. Let's see what else we have to look at. Okay, traders, the Russell 2000, clearly no gap here at all whatsoever. You see that on Monday we went down, lower, way lower than Friday's high. No gap at all whatsoever. Interesting, however, we are above the Omni proprietary moving average. We are in this new parallel channel, and it's looking pretty strong, but I would not fall in love with the upside because the reality is the head test area is here, and we're just getting there now. There's your head test area, traders. Don't forget shoulder, head test area. Do not fall in love with the upside here. However, I think you can buy it on Tuesday. Let's look at another chart. Traders, the Dow Jones Industrial Average daily bar. Is there a gap here? Absolutely not. No gap here either. But as of today, we've clearly settled above the 200 bar moving average. We are in the middle of the head test area, so there is still room to play a bit higher inside this head test area. I don't see why we can't have another day and take us up here. That's the day we're looking to take advantage of as day traders on Tuesday. And if it gets up here and starts to fail and breaks, well, that's what we expected. So one day at a time here, traders. But once again, no gap. Let's look at another chart. Traders, I'm bringing us back to the first chart in this segment, and that is back to the S&P December daily bar chart. Is there a gap here? Well, this is what we have, traders. The high was 1105.75 right here, and the low on Monday was 1108. So is there a little gap here? Yes, there is. However, if you look back to the day before, the high was 1107. So if there is a gap, it's 1107 to 1108, 1 point in the S&P. However, visually it looks like the gap is filled because of the day before. and none of the leaders or the other indices agree with that being a gap. So my answer to you is a gap, not very likely. No, I do not call that a gap. I will not acknowledge it as a gap. Will it get filled, as most gaps do get filled? Well, that will depend on what happens up here at the head test and if we fail. If we fail up here, then yes, your gap gets filled and we break. However, if we get lucky and somehow in the month of September with a big head and shoulders looming above us, we end up rallying and getting out of this area, well then we'll be buying it once we get above the head. Until now, though, we'll be very, very cautious buyers. We will get in and get out as quickly as we can, expecting to actually end up sellers before this move is over. Traders, that's what I see. That is my answer to you, Ted from Oklahoma. I hope that answers your question on the Ask Oscar segment. Is there a gap to be filled in the ES? One last chart for you, traders. Okay, we are looking at indicators, technical indicators of the S&P market. Traders, although the technical indicators are near the overbought area, you can see clearly there's room for another up day because we're here now and overbought would be somewhere up here. In fact, we've extended past that overbought area before. So we have room for another up day being Tuesday. Here in your slow stochastics, by the way, this was your CCI or Commodity Channel Index. Here in your slow stochastics, there is room to move a little bit higher and get up here. Have the blue move a little more before the red and the blue or the percent K and the percent D cross. So there is room for another up day being Tuesday, and that is what we're looking for. Traders, pull your own charts, do your own homework, take a look at those gaps. Remember this, if you think you see a gap in one indice, check the others and see if they coincide. I hope these chart segments are helping you. I hope you are learning how to do your own homework. So, traders, you've seen those charts. No, there is no gap. Nothing that I would call a real gap, but thank you so much for your question. I hope this is helping you. Traders, please feel free to send in your questions. We choose from them, and then we do these videos based on what needs you have. And people want to learn certain techniques or whether or not certain things are happening in the markets technically. You ask the question, we will do our best to answer it for you. All right, traders, so in those charts, you see that what we have, is there a gap? No, not really, because the other indices didn't have them, just the S&P, and it was so small, I'm not going to consider it a gap. Will we fall in love with the upside? No, do not fall in love with the upside here. Maybe we will be able to, but let's trade one day at a time. Green Omni for Tuesday. I don't know where we'll be on Wednesday. I am very cautious of this area because the head test is still in play, as you've seen on those charts. And traders, the problem is we can get above this little head and shoulders on the right shoulder, but then we got to do the head test on the major head and shoulders, even if we clear this area, which I don't think we will. So stay cautious, very nimble. When we buy them tomorrow or tonight, if we get filled, we're going straight out of them as soon as we can. And then like professionals, we sidestep it a little bit and let the markets talk to us. Remember, no falling in love with the upside. Yes, we are going to be buyers, at least on the onset of Tuesday's trading session. And then we'll go from there. Traders, if you'd like to come on and meet me down in my chat rooms, come on down to www.livewithoscar.com. Grab yourselves a free membership and jump in our chat rooms. Many members are showing up. Our YouTube audience is growing. Thank you so much. And our chat rooms are filling up. But I still recognize that many of you who watch these videos don't realize you can come to one of my chat rooms where we have live trading going on right there for you. Live trading, live training, a real cool room for you to hang out in during market hours. It's very difficult to trade alone. It's much easier when you have a crowd. So come on down to our site. Is there anything else I need to say in this video, gentlemen? Anything? You good?
I'm good.
You understand the explanation? Is there a gap?
There is no gap.
Is there a gap?
There is no gap.
There is no gap. Well, then I'll have to go against them. I see a gap, guys. Are you blind? No, I really, you could call that one if you only traded the S&P. But being that we trade other indices and they lead the S&P around, you got to look at all of them, traders. I hope this helps you when you do your own homework. All right, traders, I'll see you at the site. Remember, do your best to keep your emotions out of this thing. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Steps are in! Nice long word, George. Emotions are out! Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.